positive correlation between economic growth and energy consumption. Look at history, last 100 years or even more, this positive, strong positive correlation will become absolutely clear. Primarily because the correlation is there because energy fuels economic growth. My own belief as someone who tracks this sector, my own belief is that please do not write the obituary of fossil fuels soon. That's not going to happen. Certainly not in our country. Okay, put it that way. This is going to continue. Crude oil usage will continue. Natural gas usage will continue. Coal usage will continue. Definitely in India over the next 20 years at least. We cannot ignore the risk of supply disruption, which is extremely important. And of course the price volatility. And therefore risk mitigation becomes extraordinarily important, which is what we are going to discuss today. And when we talk of risk mitigation, what better scientific tool, what time-tested tool than of course using hedging as a tool for price risk management. This is where I would say enter MCX, natural gas contracts, exchange traded commodity derivatives. Also let me make this point that often most people think a derivatives contract is only for hedging price risk. Yes, that's the most important, that's the core objective of using a contract, exchange traded derivatives contract to hedge the price risk. There is another aspect which is investment. Those with adequate domain expertise, with product knowledge and market knowledge can also use these derivatives for investment and to profit from price movement. I'm first going to invite our friend Eversman from SLP Global Platts. What are the key considerations in your view for the market participants when they make their hedging decisions?
When we see the thought process that market participants go through when looking at if and how to engage in risk management, I think it's always a trade-off around basis risk or tracking error and liquidity. And so I think the best risk management products for those types of market participants are ones where the tracking error is very low, where you're able to hedge it with something that really reflects your own price risk, but also liquidity is really high and it's really easy to trade in and out of the contract.
Let me turn now to Dr. Rawat. You've been tracking investments, government policies, etc. So what in your view, what is the government of India doing to incentivize investment in gas production, and what are the supportive policies for this sector?
There is one common linkages between the fossil fuel and the cleaner fuel, and that is natural gas, right? You said like little dirtier, I would say like it's a linkage fuel, because that is going to without now promoting natural gas, you can't completely push for renewable energy as well, because renewable energy is a cyclical. You can't predict its cycle, but yeah, you have to be dependent on certain factors. And when we have to talk about the efficiency rate of the renewables, that is on a very low side. So you need to have a fuel which can step in, and that particular flexibility is provided by natural gas. Now coming back to your question, so definitely the government of India has taken notice of that, and since 2014 we have seen a lot of regulatory interference has been made, right, in terms of switching over to HEL, hydrocarbon exploration licensing policy, right, going for a premium pricing policy for the HPHT gas fields, and the kind of a push we are talking about, the CGD side. We have seen a lot of licenses have been awarded.
May I turn to Purva? How gas can...
Gas is volatile, and the price is volatile. And India is a very, very price sensitive country, especially when it comes to consuming gas. And we have seen the consumption crash down completely when the prices touched really high in 2022. We have seen some rebound last year when the prices sort of, started coming down and they came into some reasonable numbers. But it has still not reached your pre-invasion levels and not even the levels that were there, prior to COVID. That was where we were seeing the highest consumption. In terms of consumption, in terms of sectors, the fertilizer sector is the highest consumer of gas in India. And it is a highly subsidized sector, so that kind of makes it easy for the sector to absorb the high prices that we have seen for gas, and even LNG in the last few years. And obviously that also makes it about 50% consumer of LNG in India. And CGD and power sectors are also reasonable. CGD sector is a reasonable consumer of the domestic gas, and because LNG is a pass-through, like gas, it's a pass-through to the consumer, so high prices makes it difficult for CGD sector to absorb high LNGs. But the real growth in the last year, the calendar 2023, if you would see, it has come from the industry and the petroleum and refinery segments, and that's possibly because of the low spot prices. So that is an indication of how the volatility of the gas, if it goes down, it also increases consumption dramatically. If it goes really high, it decreases the consumption as well. And that's where I think the role of long-term contracts and probably the energy traded derivatives, which my esteemed panelists will have more information on, would be very useful to sort of manage that price volatility, because energy prices and gas prices in general have been very volatile, and that is that's not only because of the geographical disturbances that we see or the onset of a pandemic. It's been volatile even before that. So that's the nature of the commodity.
Makes a lot of sense. Thank you. I think that makes the argument for hedging even stronger. What you had said. Very well. Thank you very much. Let me now go back to Matthew. May I call you Matthew? Is that okay? Or you are? Will you share with us your thoughts on the trends, overall trends of companies using hedge contract to mitigate the risk? Any thoughts on that?
It seems like anything you can do to smooth your pricing out is a good idea to manage that risk. And if you can lock in prices where you know that you're going to be running your natural gas plant as something closer to base load as opposed to only as a peaker, that seems like a good idea. It's just a matter of, do you get that moment in the market where you can lock that in, and is it economical? And do you have visibility into what you're going to be selling the power out to make sure that you're locking in an acceptable margin? And to the extent you can do that, it seems like a really good idea.
And let me come back to Dr. Rawat and ask you about the role of LNG in India's energy security and our diversification efforts. What role is it playing?
I think everyone has accepted that point. Prior to our session, there were multiple sessions, and everyone was has talked about the same thing. In case of natural gas, we are almost 45% dependence on import, and we are importing through LNG only. We don't have a pipeline connectivity, and definitely LNG trade is likely to see a lot of surge in future, because the way the government of India has set up a target of 15% by 2030, and a lot of push is coming towards that direction. And if domestic gas does not keep a pace with that, you have no other option but to rely on LNG. Right. Unfortunately, in the Asian side of the world, most of the gas trade is happening, which is the prices are linked oil index based, right? And so that is quite a challenge for an economy like us. And somewhere I believe hedging, and when we are talking about the exchange-based trading, it has to take a pace, right? It has to gain a pace, because that's the only way wherein you can, restrict the cost, right? For power plant, gas is like an input, right? If your input cost is on a lower side, definitely then, it would be easier for you. You are not passing on it to the customer, right? As of now, like whatever increase happening in the gas side, we are passing it on to the customer. And wherein, the gas generated electricity is not able to, give a competition to the other fuels, right? So if we have to make a place for gas in the Indian energy mix, we have to make it cost competitive. We have to ensure that the switching cost is on a lower side. So one has to ensure like they are hedging against that. And exchange provides a right platform for that.
Yes.